Anna, thank you. Economist John Lonski with me this morning. OK, John, look, if Trump suspends the gas tax, will it have that much impact on the economy?
Hardly any impact at all. I mean, one way of looking at this, say gas is going at $4.60 per gallon before you make this cut, which would reduce the price of gasoline to $4.42. You would see the cost of 15 gallons of gas, a fill-up, goes from $69 down to $66. Big deal, especially when you consider that prior to the Iran conflict, the average price of gasoline was just $3. So you're still stuck at $4.42. You're far away from $3 per gallon. Back then, it was only $45 to buy that 15 gallons of gas.
We've got the Consumer Price Index out today, up 3.8% in the past 12 months. Look deeper into those numbers, and you see the core rate, that would be without food and energy, I think, the core rate.
Yep.
I think that was 2.8%. That's the core.
Yeah.
That doesn't sound good for the future.
No, it doesn't. And let's also consider, let's not be so quick to throw out food. We have to consider with food prices, they're up 3.2%. That matters to people. You got to eat before you drive your car. I'm not going to talk about energy prices. They're sky high. And as we look forward, we would have to expect that higher costs for energy are going to seep into the core. Businesses are facing higher transportation costs because of the higher cost of diesel, for one thing. Petrochemicals, let's not forget about that. And there's a number of materials that are linked to this closing of the Strait of Hormuz, in particular aluminum. Its price is up 52% from a year ago, in part because you can't get the aluminum through the strait.
Is that why yields on treasuries are rising? I've got the 2-year very close to 4% now.
You're right on target. When you mentioned that 2-year Treasury yield close to 4%, you know what that means? There's not going to be a Fed rate cut at any point in the future. I think I last looked at this. Fed funds futures have an implied probability of just 3% to a Fed rate cut by the end of this year. And moreover, when they look at 2027, they say that in June of 2027, there is a 58% chance of a rate hike, despite the fact that Kevin Warsh is going to be taking over the Fed.
You're an economist, but you pay attention to the stock market. Stock market, the NASDAQ in particular, is, look at that, there's the 2-year Treasury yield, exactly 4%, there you go. The NASDAQ is down over 400 points. Is that linked to higher interest rates and an uptick in inflation?
Well, it definitely is, because if you have higher interest rates, everything else the same, that means that the discounted value of future earnings are lower. And this is really would hit stocks that are richly priced, very high PE ratios the most.
I thought that the market would brush aside the inflation news, but apparently not. It's down. There you go. John, thanks for being with us.
My pleasure.